Okay, good afternoon, everyone. I'm David Paul. It's a great pleasure to be here. And the title of the talk, I'm going to struggle to get it in an hour, but the title of the talk is called The 10-Minute Investor. Now, what I want to try and do is to get you to a point where I'm going to show you how you can consistently outperform the market and do so in less than 10 minutes a day. So I'm talking about a very relaxed type of money building, not day trading or anything like that. And by implementing the things that I'm going to show you today, you're going to be able to invest with confidence and really outperform the stock market in less than 10 minutes a day. Now, I don't mean that you're going to buy at 10 o'clock and sell at 10 past 10. It's the opposite of that, where you can have a life, you can come home from work, you can come home from the golf course or wherever, check your portfolio, do so in a fairly short period of time, and still do well in the market. Now, personally, I've been in markets since 1982. I put on my first trade in 1982. It was a trade in South African breweries, and it was a winning trade. And I traded while working for De Beers in South Africa from 1982 to 1988. And in April 1988, I cut the corporate umbilical cord for good, and I've been trading on my own ever since. I split my money up into the old 80-20. And with 20% of my cash, I in fact take leverage bets in the marketplace, and we've just had a wonderful discussion on support and resistance, which is really good. With 80% of my money, I actually do what I'm going to speak about this afternoon, which are unleveraged, pretty much long-only positions in the stock market. So if that sounds good, we can proceed. Before we can proceed, I've got to put up the VectorVest disclaimer. I speak maybe under correction, but I think we're pretty much the only vendor of stock market software and education in the UK that's fully authorized by the FCA. Now, I'm allowed to give investment advice, but I'm not allowed to give investment advice if I haven't sat down with people and done a long and very complicated fact find, the sort of thing that your financial advisor would have done with you. So I'm allowed to talk about what I do myself, but I have to, according to the regulator, always say that although the shares that I'm investing in personally are okay for me, they may not be suitable for you. So that said, I can move on. So we're going to cover three sections today, ladies and gentlemen. In the first section, we're going to do our best to try and shift from becoming from inconsistent to consistent gains. We'll identify some mistakes that come up over and over again. We'll talk about what they look like, and just by knowing that, it'll help you out in all markets. The second part of the presentation, I'm going to give you a three-part stock buying checklist. It's the same checklist that I use with that 80% of my own money. And we'll look at some examples. And then we're actually going to have a look at the market itself and look for some stocks. So the idea is that after today's webcast, this hour, you're going to have a few stocks that you'd consider buying yourself. So I think that's pretty cool. And then the last little part is that I'm going to wrap things up and show you how to put together a 10-minute routine, which will allow you to manage this process in, as I say, 10 minutes a day. And I'm going to try and do that in the next hour, and that's quite tough going, okay? So how to move from inconsistent to consistent gains. And I think the previous speaker spoke about this, and it really shows me that he knows what he's talking about, because a really important part is this 4 mistakes preventing you from consistent gains. And the first and the biggest mistake is that we think of the money first. Now, you may think that I want to make money. That's the whole point of investing and trading, and it certainly is. But if you have a job and you're successful at that job, You've been successful because you concentrated on doing your job well. When you do your job well, you get financially rewarded for doing that job well. So if you think of the best and the richest dentist in your area, I can pretty much guarantee that that guy has made his name and made his money by perfect execution of each and every process. When Lewis Hamilton's driving his little car, he's focusing on perfect execution of the process. So your job, ladies and gentlemen, is to get yourself to a point where you can focus on perfect execution of each trade over and over and over again. Now, you don't need a dozen setups. And as Bruce Lee said so many years ago now, well, 50 years ago now, I suppose, I don't respect the man with 10,000 kicks, but I do respect the man who's got one kick and who's practiced it 10,000 times. So your job is to put your strategy into practice. I'm more than happy to say that there are good strategies and there are bad strategies, but to put your strategy into practice without fear or hesitation over and over again, to be totally and utterly present. Now, if you go on the net and you just type in Zen in the markets, you're going to find a little book by a dear friend of mine who's died, unfortunately, called Eddie Topple. And Eddie traded on the floor of the Chicago Mercantile Exchange from the first days of the S&P contract. And on the floor, he was called Fast Eddie because he never hesitated. He focused on perfect execution of each and every trade. And I think that if what I've just talked about resonates with you, Eddie will be able to talk you through how to practice staying in the moment. Now, if you move out of the moment, it's very easy to get here. Has anybody ever been there? I think we all have, okay? Especially when the market's moving up and down. End of day is bad enough at times. Those of you that are trading 5-minute charts, my best friend's a guy called Tom Hogarth, and he trades a 2-minute chart of the DAX. My word, you need to be present to trade a 2-minute chart of the DAX. That little thing flying up and down can take you out of the moment very easily indeed. So it's easy to get like this young man. I think pretty much everybody in the room will have been like that at one stage in their life or another. Think about the person who's got road rage. What do you think about the decisions this fellow is making now? Are they the same decisions that he would make when he's sitting in his armchair at home? And for me, the only way that I've been able to focus on perfect execution was to practice becoming present, focusing in this moment, not the last moment, not the next moment. Interestingly enough, if I do a seminar, Simon, I've done dozens of seminars for the banks. The last one was a 3-day one for Barclays. And I always get one guy at the start of the seminar to write down the question. And the question is, if you're so damn good at this, why are you doing seminars? Okay. And at the end of the 3 days, I answer that question. And the reason I still do seminars, especially the 3-day ones, which are hard work at 62, is that when I'm, in fact, speaking in front of a very motivated group of people like bank traders, I never feel more present. I'm totally there. A few months ago, this was a seminar in Cape Town, a chap came up and he said, can we in fact stop for lunch now? Well, I said, why would we stop for lunch? It's only 12 o'clock. And he said, it's 4 o'clock. I'd lost all track of time. And you've all been in that place. The one thing, a little bit of advice that I can give you, that if you are making decisions and watching the clock, you are not in the right place to be trading. So that's the first mistake. So if you've ever said, I know it's down now, it'll come back, It's already down 20%. I might as well hold on to it now. I lost more than I thought, but if I close it now, it'll probably go up tomorrow. The last time I sold a stock, it went up, so I'm not selling this one now. So we've got frustration, fear, greed, despair, and hope. And if those emotions, ladies and gentlemen, are running through your head, then you're going to become emotional quite quickly. So what we need is we need to build a system, and we need to work on ourselves to be able to be present, to put that system into practice over and over and over again. I think that reading Trading in the Zone by Mark Douglas will help, but nevertheless, when you get to his exercise at the end of the book, it's like me telling you that you should do some press-ups. The only people who can do the press-ups are you. Okay, I can't do your press-ups for you. Mark Douglas can't show you how to build trading discipline. You've got to do it for yourself. So that's the first big mistake, and that will I don't care whether you're trading intraday, whether you're trading end-of-day charts. That is a common thread to it all. And most people, folks, have got to lose a heap of money before they realize it's important. Don't let that be you. I don't mean to sound dogmatic, but I'm very emotional about that. Mistake number 2 in the stock market is buying stocks that are falling. And this old 2 for the price of 1 has bankrupted more traders in the stock market than anything else. And it's fed on by the fellows on the TV, all about pound cost averaging, the old 2 for the price of 1, and we have a really good trader out in Oxford who got enamored with one company called Marconi. He felt that it couldn't ever go broke. He bought it at £13, it went broke at 5p. Okay, so that pound cost average may work with indices, but it doesn't work with stocks. So buy shares that are rising, breaking new highs. And this is a share, this was in a seminar that I did. It's a US share called WIN. And the fellow, one of the attendees to the webcast, had bought the share because it had broken out of a trend line and had come back and kissed the trend line, and prior to that he felt it had made a double bottom. So he had in fact put on some form of trend line like this, and one of the old adages is it breaks and then kisses. I felt, after looking at it, now I'll show you the analysis momentarily, but that in fact was a poor trade, and he sold it in fact, and then what happened the next day was it fell down the page, and then it fell much further down the page. Okay, so buy stocks that are rising, breaking new highs, not breaking new lows. Simon, never wear that vest again. Holding on to losers too long. Okay, and that's a subset of the previous one. It's happened to us all, where we've held on to one stock because we felt it actually couldn't do any wrong, and it's wrecked our whole year. So no exit plan, and that's like jumping out of an aeroplane with no parachute, folks. And there's WIN again, just fell down the page. The last mistake is market direction. They lose money in the stock market because they ignore overall market direction. And for years we've been taught that buy and hold is the way to go. And your financial advisor must have told you around that 1,000 times. It takes many years to get up there, and it takes a very short time to fall. So ladies and gentlemen, there is a good time to be in the stock market, and there's an awful time to be in the stock market. And the founder of VectorVest, Dr. Bartolito, puts it really well. He says that the most important thing to know is whether the market is rising or falling. Everything follows from that. Okay, and clearly we can see that's the 2000 to 2003 sell-off. That's the global financial crisis, and that's the bull market we've been in ever since. And the average mutual fund, in fact, fell 40% in that period. And if it falls 40%, you need to make 66% just to get your cash back. And for many people, that could take years. And for many people, it'll never happen, because there's two types of capital, folks. One is the loot, and secondly is the emotional capital. And I know for a fact from very good friends of mine who are financial advisors that there's a heap of money still sitting in cash from this, because the people got such a scare that they haven't had the strength to get back into the market again. Two types of capital. So which one of these mistakes has cost you the most over the years? When I started, I took a smack in 1984. I bought into this one stock. I thought it could do no wrong, and the darn thing kept falling down the page. So I actually blew the account. Did really well in 82, 83, and in 84 I blew the whole damn lot in one stock. And I sat, as I was in South Africa at the time, I sat on a mountain outside Johannesburg, and I, in fact, meditated to make sure that it would never happen again. Okay, so that's something for you to think about. So the fix. Well, at VectorVest, we have our fix is in the form of this triangle, and there's 5 parts to it. The first part is stock analysis. We want to analyze any stock that you own or you're interested in owning to know whether it's over or undervalued. So VectorVest puts a value to every stock every single evening. We want to know whether the earnings are rising or falling and how safe the earnings stream is. And we want to be able to do that in a few seconds without a great deal of effort. And around the world, VectorVest sorts and analyzes all the stocks and all the major stock markets of the world for value, safety of earnings, and trend. The next thing that we want to look at is that we definitely don't want to hold on to losers too long. So we want a stop loss in place for every share that we own or we're thinking of owning. And we want a target in place. So we want to know our exits. Included in this is position sizing. As I said a second ago, there's a good time to be in the market and there's an awful time to be in the market. So we want a definite rule or signal in place to make sure when the overall market is rising. Some people use moving averages on the indices. Moving averages are great on the way up because markets tend to move up quite slowly, but they're not so good on the way down because they tend to fall quite quickly and there's a lag in the averages. And on VectorVest, we have our own system that does that. Fourthly, we want to find the very best stocks that are rising strongly, and we have 2 methods of doing that. The one that I use is called the Midas Touch. It finds shares that are in the throes of a long-term trend, a very strong long-term trend. And the last thing we want is a plan. And by using this 5-step process, it allows you to trade with confidence and create consistent gains. So, I haven't got a great deal of time to elaborate on this, but I just want you to think now of which one of those you need to work on first. Okay? Which one of those do you need to work on first? Now, for me, when I did this, I had to work on stock analysis because, one, I'm a mechanical engineer, and I've got a PhD in mathematics. And I found the accounting, I had no formal accounting theory or tuition apart from what I've recently had to do for the CISI, which nearly killed me, I may add. So I remember vividly in Johannesburg the annual reports piling up in the corner of the office. So for the first, until I got involved with VectorVest about 5 or 6 years ago, I was primarily and only a technical trader, so I had to work on stock analysis. My exits were good, my market analysis was good, I found good stocks, and I definitely had a written plan. That came out of that meditation exercise in 1984. So for me, this was the big thing. So which area do you need to focus on first, ladies and gentlemen? I pretty much will guarantee that most people have got to take a great deal of pain before they've got a plan. I have never yet seen a retail trader that didn't have some resistance to putting their trading ideas down on paper. Okay? And waiting for the setups to come along. And if you are an intraday trader, I reckon that there is some form of biological link between your backside and the finger you use on the mouse, because as soon as that little bum hits the trading chair, you want to do something. Am I correct? Does that resonate with anybody? As soon as you put your bum on that trading chair, you want to trade. Okay, so in courses I've had to, at one stage I had to tie one guy's hands to the chair so he couldn't sort of trade without any thought. So let's look at how the top traders pick shares. Now, this was me, a mechanical engineer trying to make sense of the fundamentals. I was like a mechanic trying to loosen that little nut with a big ring spanner. We're taught by gurus we want to get to where we want to be quickly, and we're taught by gurus that that's difficult. Now, Bart DeLito, as I say, he reckons that good portfolio management starts with buying the right stocks. He's also a Chelsea supporter, so that's where he got the blue jerseys, I think. Just owning those stocks will help the portfolio do well. So here's the checklist that we look for at VectorVest. We look for stocks that are steadily rising and not too volatile, that the company is making money and growing their earnings, and we favor undervalued stocks. So, Simon, maybe you can help me here. I don't think I can see people's responses, but I've got three charts. Now, these are three 1-year charts of three different shares, 1, 2, and 3. So I want you to look at them very quickly, and I want you to choose one, the one that you would feel most comfortable in buying today. Which one would that be?
3, 3, 3, 3. Seems overwhelmingly looking at number 3.
Yes. That when you're sitting with no money on the table, that in fact is the logical response. And if you haven't read this book, ladies and gentlemen, then get on Amazon straight after and buy yourself a copy. It's called Reminiscences of a Stock Operator. And please don't ask me how to spell reminiscences. Written by a guy called Edwin Lefebvre 100 years ago. And I have it on good authority that if you get a job at Goldman Sachs, the first morning you get there, they give you a copy of Reminiscences and they show you where the coffee is, and they say, don't bother us until you've read it. It's about a speculator called Larry Livingston, which is a pen name for the great Jesse Livermore. And he says in the book, I've never seen a share too high not to go higher and too low not to go lower. Okay, so number 3, it's not volatile. It's already going up in price. It's already doing what we want. It's rising in a smooth and steady fashion, and that makes me sleep better at night when I've got those stocks in my portfolio. Number 2, there's lots of volatility, and in hindsight, I suppose we could pick that and we could pick that, but those of you that have had a go at it will know that it's much more difficult on the hard right edge here than it is in the past. And clearly, we could have a go at trying to pick bottoms here, but I think, I don't know who said it, but yeah, it was in Zen in the Markets. Eddie Topple says that top and bottom pickers become cotton pickers. The old story of the falling knife. So the next one, that's number 3. Down below, in a separate window, I've got earnings per share. Now, I've added EPS, and VectorVest calculates a forecasted earnings per share, which makes it very easy for me to get these numbers. I don't have to go trekking around and digging through a ton of data to find this. And I want to see earnings per share rising smoothly from the bottom left to the top right of this chart. And as you can see, over the last year, this is an American chart, the earnings per share has risen from 3 cents to 4.5 cents, a 50% increase in earnings. Now, Ben Graham, who's Buffett's mentor and the intelligent investor, he writes the following. He says that earnings per share is the engine that drives the share price. And if you get nothing out of this seminar, this little talk, just put that down a piece of paper and stick it to your fridge door. So this drives the share price. It's not moving averages that are pushing this up the page, folks. It's because the share is actually making more money. That's how the city thinks. When a company's earnings are rising, the company can grow. It can put more money into research and development. It can buy out other companies. So this little company could buy out a company that's privately held. They would buy it on a PE of probably 8. And immediately that share would be revalued to a PE of whatever they're trading at, maybe 20. So wouldn't you rather invest in a company that's making money and making lots more money every year? And the third thing is that I want to favor undervalued stocks. And again, VectorVest puts a valuation to every stock in the market every single evening. In VectorVest UK, VectorVest UK comes with VectorVest USA, and we calculate a valuation for every share in the market every single evening. Our valuations are robust, and the algorithm is fully revealed in a little book that Dr. DeLito has written called Stocks, Strategy, and Common Sense. Now, I did this a little bit earlier on, and if I had more time, I would go into the program. But I've just looked at a search on VectorVest where I've, in fact, looked for shares that are trading less than their value. That's all. And I've sorted those shares by the VectorVest proprietary master indicator VST. So every evening, for all of the shares in all the major markets around the world, VectorVest sorts and ranks for value, safety, and trend. And then Dr. DeLito put those numbers together into the master indicator. So all I'm looking for are shares that are trading below their valuation and sorting them by our master indicator VST. Now, I did this search on the 21st of September last year. So that's a year ago. All I've done in the next slide is that I've taken a quick test, which is just simply what was the price a year ago, what's the price now, and the market is up 10% in the last year, and that portfolio of top VST stocks that are trading below the VectorVest valuation is up by 55%. So it's actually beaten the market by 5x. Now, we are more than happy to give you a trial of VectorVest, and you can actually try that out for yourself. It's very, very, very easy to do. So just finding shares that are trading below the VectorVest valuation is an incredible edge on its own. So that's my watch list. Stock prices steadily rising, not too volatile. The company's making money and growing earnings. Favor undervalued stocks. Now, if we go back to this win, remember I told you that I advised Steve, I think his name was, yeah, Steve, to sell it. Now, here's what the rationale behind that was this. Because, ladies and gentlemen, when I put on our valuation and I put on earnings per share, I noted that the price was a mile above our valuation, and earnings per share was falling off a cliff. So I felt that the probabilities of this being a turnaround situation were low, and as you've already seen, the share fell through the floor. So that's what we're looking for. This is what we're looking for. This is a US share that I had a little bit of good luck in. There's earnings per share rising through the roof, and it just breaks out and just keeps on going. and that share since the last buy signal on VectorVest is up 21%. So for those of you that are expert technical analysts, and I know the room is full of them, then you can use your technical analysis to find really good entries in shares that are undervalued, that are growing their earnings strongly, that are rising. For those of you that struggle with the charts, then VectorVest has a proprietary buy, sell, and hold signal that will do most of the work for you. But at VectorVest, what we're trying to achieve is the best of both worlds. We want to use the best technical analysis combined with the best fundamental analysis. And my dear friend Zach Meir, who interviews me on Core Finance, he calls VectorVest the best of both worlds. Okay, so that's what I'm looking for. There's another American share, Skyworks, exactly the same thing. Earnings per share up from 250 to 450 in the last 9 months, driving the share price. And Southwest Airlines has been another great one, earnings per share rising strongly. Fever Tree in the local market has just been magnificent, just kept on going, earnings per share growing from next to nothing through the roof. That's been great. Victoria, the biggest manufacturer of carpets, those of you that are technicians should be able to see the 5-wave continuation pattern here, and it broke out of that 5-wave continuation pattern. There's the VectorVest buy signal just here. I think the 5-wave got you in a day earlier, and it's still moving up the page strongly. So the last VectorVest buy signal was here, and depending on your exit, you would have got out maybe there when it went to hold. Okay, so that was quite a nice move, and then back in again from there and out just there again. Now, longer term position traders hold it through the hold. More short term swing traders, as soon as the buy turns to hold, then they get out. Okay, they're trading more frequently. So Victoria has been great for me, and Games Workshop has been one of my winners, and these are the sort of shares that I put 80% of my capital in, and I trade them unleveraged, I trade them long only, and that share has had a great run, and it's moving strongly up the page already. These are quite easy to find, so those are the shares that I think you consider, but I'm now going to go into VectorVest itself, discard those, and then I want to go to the program. That's the front page of the program, and we'll get here in a second, but at the moment our proprietary measure of the trend is down, and VectorVest does not advocate buying stocks at this time. Remember, there are good times to be in the market and there are awful times to be in the market. At the moment, we're advising people to sit on their hands. That's been the case for at least, let's go back, it turned down on September the 12th, and we've been advising people to stay out of the market, not buying any new shares, and those traders should play the market as it develops with a bias towards the downside. That's been the advice for the last week. Now, I also day trade when I feel like it. I'm 62, but when I feel like it, I day trade the FTSE, and I only day trade in the direction of the advice here. That increases my hit rate enormously. So let's go to viewers, where all the stocks are, and this is today's date, and I've got all of the stocks on the London stock market. Of the 2,156, I've in fact loaded 50 to take the grunt off the internet, although the internet here is very good at our offices in St. Paul's, but that hasn't always been the case, and sometimes when I do all the calculations and pull up the charts, the sound quality would go down. So I'm now going to go and chart some of these, and if I go right down, let's say, not give it too much to do, go to Edinburgh Trust. Let's chart them. And there's Games Warehouse. There is the earnings per share is gone up, doubled, more than doubled in the last year, driving the share price up the page. The last buy signal, ladies and gentlemen, was just there at 11. It's now at 18, and that's just a cracking trade, okay, with no stress, no nothing. Now, I trade these unleveraged, and that is just great, and it's going. Look at the earnings per share moving up the page very strongly indeed. This is Alliance Tech Trust. Now, again, those of you that are technicians can probably see the ascending triangle here, and I'm not in this one, but again, those of you who are more sophisticated, a la the previous speaker, could be looking to buy pullbacks to old highs, etc. So you don't have to forget about your technical analysis, but when you're actually trading in a share that's undervalued, that's growing its earnings very, very, very strongly, there's our valuation right up there. You see it was revalued here. Okay, I'll just take that out because it wrecks the resolution. So Alliance Trust is something that I would look at certainly. Now, JD Sports pulled back strongly. I had been in this share, ladies and gentlemen, for years, right, for years. Okay, from £1, and remember it was there was a 5-for-1 split there as well. It then pulled back, and it pulled back on largely a broadside from Amazon, which has killed a lot of competitors, where they were going to have a tie-up with Nike, and there was a trading statement as well. It clipped its stop loss just here, and yours truly got out there. All right, and it's broke down the page. For those of you that are technicians, it went straight to that 62% retracement and now pushed up the page. It's back on a buy signal again. Our valuation is up here somewhere. Okay, and although at the moment VectorVest does not recommend buying stocks because the general market is falling, but if I see it's still on a buy recommendation and the general market does turn, and VectorVest says it's okay to buy stocks, then I will be looking at a position once more in JD Sports. I would suspect that it needs to pull back technically, maybe even pull back and kiss this line or something like that. I won't try to move. I'm very, very fond of my falling wedges, but that I think will probably get back maybe to here, maybe to there, the 350 level odd before it goes anywhere else. There's Victoria. And moving sideways in a little ascending triangle. It's just a matter of time before that goes. Valuation is up here. Okay. There's Ferro Expo moving up the page very, very strongly indeed. Our valuation well above the price. Earnings per share has risen strongly. Looks like a contender to me. Microgen, very interesting share. See it come off those lows and pushing up the page. It's on a buy signal. When the general market turns, then there's money to be made there. There was the last buy signal from there, 350, and if you'd sold it when it went to a hold, you'd be out at about 5. Okay, piece of cake. Much easier. I assure you that I've been doing battle with the forex market for a very long time. This is much easier. IQE. I didn't go into this, and I should have. I felt that this earnings per share wasn't linear enough, but it just kept going. It's just kept going. There was the first buy signal just here. Went to hold there, then back to a buy again, and that's from 60 to 160. I didn't get into that myself. A Swallowfield, no, it's on a sell signal, and that is not the sort of share we want to be bothered with. This little mining share looks as if it wants to go places again, as you can see, and these levels are becoming support again. Caledonian Investments going the wrong way. Maybe if it gets to a buy recommendation, I'll have a look at it again. Again, massively undervalued, we believe. Look at the valuation right up there. Okay, and this is Premier Tech moving up the page very strongly indeed. Okay, and I hope that you can see Berkeley. Just this is going again. I think I was waiting for it to pull back, and it still can get back to 34, especially if the market is weak in the next day or two. But if that goes to a buy recommendation, then the ball is in. The game is on once more. Okay, so I haven't got time to go through many more of these, but I hope that I've given you an idea how you can very quickly and easily marry sophisticated technical analysis and no technical analysis just by using the buy, sell, and hold. All right. But those of you, I know the room's full of really good technical analysts. You don't have to forget your technical analysis. You can marry that to the really best shares. Okay. So, Sam, did you get any questions along the way there? I've covered a lot of ground. As I say, a couple of weeks ago at a bank, I spent 2 days doing this.
I know, it's a lot to squeeze into these short sessions. We other speakers struggle as well. But this is the Round the Clock Trader is here to give you a taste, a flavor of all sorts of different strategies and systems. But it does. We are limited to sort of 45 minutes of real talk time. However, thank you for going through as much as you can. 1 or 2 questions are starting to come in. So George is saying, what account size would your strategy require?
I think that it would require £10,000 of that order, I think, to start. I think you could start with less, but to spread yourself into 6 or 7 shares, you could start with 5. My son started in the UK market with £5,000. He did really well. He's now a fund manager. So we want you to get to move to get your answers quickly, as opposed to being overwhelmed by data. And now, the last little thing that I want to talk about is the 10-minute portfolio management plan. And I've laid this out in the form of a matrix. 9 boxes in it. And the first is that we need to know when it's okay to buy, when to buy. And for that, we need a market entry signal. Now, this comes from the general market itself. At VectorVest, we use the VectorVest composite, which is an equally weighted index of the market. And we have a totally objective method of telling when the market is rising and when the market is falling. So whether you use our method or whether you use your own method, you need to know when it's the right time to be in the market. And I've showed you a little bit of our own method momentarily ago with that little traffic light. We want the share to be rising, and so we want the market to be breaking new highs that particular day and the share to be breaking new highs. In terms of what to buy, that's our 3-part stock buying checklist that I talked about a moment ago. Rising price, rising earnings, undervalued. And when to sell, we want a market exit signal. And again, some people use moving averages in the S&P 500 or in the FTSE 100. It's not what we do because it tends to be a little slow. And we have a system, that system I spoke about a moment ago, called confirm calls, which give us that objective measure of when the market is rising and when the market is falling. Purely mechanical system that looks at the price, the rate of change of the price of the composite, and very importantly, the breadth of the market. So it's quite a sophisticated market timing, but totally and utterly objective. No scratching your head as to what's going to happen next. When to sell, every share's got a stop loss, and when that stop loss gets hit, we believe that you should risk no more than 1% of your account. So if you start with £10,000, you would in fact be losing £100 if you're incorrect. And we have a profit target. Now, some people have a profit target. That could be a fib level that I teach. That could be an old high. And some people, in fact, use a trailing stop loss. Some people use when the buy recommendation turns to a hold recommendation as a target. We have a really good investor at our Birmingham user group who uses that and is leading everybody in our trading competition. So that allows us to keep our portfolio under control in a few minutes a day. So ladies and gentlemen, if you're not satisfied with your results, maybe that's why you've turned up here today, and maybe you're buried in data, or your results are up and down, and it's so easy because of things that have happened in the past to have lacked confidence. And maybe you're doing great and you just want to do a little bit better. So we want you to understand that it's possible to get your answers quickly using the right tools, and by doing that you can invest confidently and not have to rely on the Sunday papers and gurus. And that will get you to a point where you're investing confidently. So there is a choice to be made and a question to be made. How do you create this type of portfolio? Well, the choice, of course, you can do it yourself. I tried and I failed, and my annual reports weren't filed nearly as neatly as this fella. Or you can, in fact, join up with a system that's been making money for investors all over the world. Thousands and thousands of people around the world using the VectorVest system. Why would you want to do the work on your own if there's a system out there that's already doing this for you with no effort? So I want to give you a plan that if you and I were to work together for the next 5 weeks, here's what I would get you to do. I call it the Successful Investing Quick Start course. The objective is to consistently outperform the market in 10 minutes a night. Now, it's not a get-rich-quick scheme, and it's important that you understand that you shouldn't expect results in the next 10 minutes. This is serious. It requires some effort on your part, and if you're not going to commit to it, then don't bother doing it. It's not for you. You should log off right now. This is for serious people who want to build their capital without a great deal of effort, safely. And the objective is more money, more security, and more freedom. Certainly the third one's really important for me. And that's why we put this course together. The easiest way, I think, is to just map it out. Week 1 is a 30-second stock analysis system. So you'll be able to determine very quickly whether a stock's a good or a bad investment to get rid of information overload. Week number 2 is all about weeding your portfolio, getting rid of the bad ones. So in week number 1 and 2, we're going to become an expert at stock analysis, and we'll pluck the weeds out of your portfolio. Week number 3, you'll learn the exact signals to know when it's good to be in the market. And this is vital, because if you buy stocks at the wrong time, even the good stocks will drop. So you've got to know when it's okay to buy and when you shouldn't be buying. So we've taken the bad apples out of your portfolio, and we've identified when it's a good time to buy into new positions. And week number 4 is all about what stocks to buy. You'll get my 2 best cherry-picking techniques, so you'll never be left with a guessing game or having to resort to the financial pages of the Sunday papers. And then the last is the plan, how to put it all together. So by learning all this, at the end of the course, you'll have a simple step-by-step system to buy and sell stocks. Now, the Americans sell that for $475. But if you're prepared to roll up your sleeves with me, even if you've never been near a stock market before, today we do that for £5.95. I built these 5 lessons as recorded classes. You can access them anytime. This doesn't mean that I'm going to leave you hanging. We'll be there for you live every week, and I'll tell you something about that in a second. So I want to make sure I can help fix your portfolio and turn it around. And you can't buy yourself a lunch for £5.95, I don't think. So I'm going to, in fact, add in 5 weeks access to VectorVest UK and VectorVest USA. Again, for the £5.95, and that's £44 worth of value. And then I'm going to add in 5 weeks in coaching. I do 2 webcasts in that time personally, and every Tuesday night we have a training webcast and we have an 0800 number which gets you through to our call center free, and that's open from 12 o'clock midday to 12 o'clock at night, and the objective is to get you up to speed in making good decisions in the stock market to build wealth without a great deal of time, safely. So just think of which one of the mistakes has cost you the most and how much it's costing you not to have this information. That's the syllabus and all of that. So the 5-week course, access to VectorVest UK and VectorVest USA, plus all of the coaching is £5.95. That's the little code, vectorvest.co.uk/RTC, and I'm sure Simon will put that up as well. We have user groups around the country. We have a user group in London. We've got a user group in Guildford. We've got a user group in Oxford. We've got a user group in Birmingham, Manchester, Edinburgh, Belfast, and Dublin, and Bristol. Nearly forgot about Bristol. Meet St Taunton, lovely little place. Now, on that £5.95, you won't need this, but for some strange reason, if you were to take the Successful Investing Quick Start course and you don't feel it's for you, then there's a 30-day money-back guarantee on that, no quibble, I assure you. So there we go, vectorvest.co.uk/RTC, and I look forward to working with you, okay, to put this all together for you over the next 5 weeks. So in summary, VectorVest analyzes, sorts all of the shares in all of the major stock markets of the world for value, safety of earnings, and the trend, and combines them into the VectorVest Master Indicator VST. We look at the overall stock market in each country of the world, and we make a judgment as to whether it's going up or down. And if it's going up, we advocate buying safe, undervalued stocks that are rising in price at this time. And my Successful Investing Quick Start course will show you how to put that all together. It's built into the VectorVest program itself. Simon, I hope I haven't got into Charlie's time.
Haven't, David, that's perfect timing, just 5 to the hour, which is great, thank you. Just to come back to Gordon's question, he says, I believe the package includes the US shares too. Is the color guard for the US different to the UK?
Yes, at the moment, it's quite a strange situation. The US market has been powering up for the last 10 days, while the UK market has been powering down. And I think that in the UK, we had a copper price that was pulling back that affected the big miners, plus a pound that was strengthening based on that inflation report last week, and the high probability of a rate hike in November this year. So those things, in fact, caused the markets to move in 2 different directions, yes.
And just maybe to explain to Gordon, when you subscribe to the trial or indeed the actual system, you will get the US is the default system, but you will also have the UK or any other jurisdiction that you've trialed. They're separate databases, aren't they?
That's quite right. They load in 2 different. You can have both running at once, but they load in 2 different windows. Yes, you've got to put in your username and password once, and you're going to go into the program, and you'll see 2 flags: the Union Jack and the Stars and Stripes. If you click on the Union Jack, the UK program opens, and then you need to click on the icon again, put your username and password in again, and then click on the Stars and Stripes, and the American one will open. And we do that, we keep them separate because it would affect the scam. Many people who are trading in the UK, for example, if they do a search, like the search on price less than value that I did, if you're exclusively trading in the UK, then you wouldn't want American shares to come into that search. So we keep them apart for that reason.
Fantastic. Okay, Richard. Richard keeps asking if we can trial the software. I think the trial is that 5-week course.
Quite so. So it's £5.95, and the software is in fact a part of the Quick Start course, packaged all together.
Fabulous. Great. You're welcome, Gordon. That's great. Robert says, "Hi, David. I'm already a subscriber, but a lapsed investor. Can I take the trial as a refresher?"
Is he subscribing to VectorVest at the moment?
Robert, I think you're already a subscriber, so yes.
Well, if you go to training, Robert, and just click there, you'll see the course is just built in. That's the course.
There we go. Keith says, "Will the offer be good after the 6th of October?" Send you an email.
Yeah, that will be fine. What I can do is that I can, in fact, if he emails me, david.paul@vectorvest.com, we can sign him up now with the start date for the October, with pleasure.
Okay. Keith, or if it's easier, if you didn't get a note of that, just email myself.
Okay.
I can forward it to David. But that was david.paul@vectorvest.com.
That's correct, yes.
Neil says, "I'm a subscriber. How do I contact the Birmingham group?"
Again, email me and I'll put you in touch with Tim and Victor who run it. I haven't got their email off the top of my head, but Tim Shelley and Victor Smith run it, and it's run in Erdlington on a Saturday morning. I think it's the second Saturday of the month. But if you email me, I'll put you in touch with the gentleman who ran it with the greatest of pleasure. It's a great group, lovely venue, and very, very positive people. And the user group leader and has been trading for a very, very long time. Very, very experienced. I think you know Victor, Simon.
I do. I've known Victor for many, many years. Yes.
Yes.
It's been my best.
Very experienced investor. Yes. Great leader.
David, thank you very much. We'll have to draw it to close there. We're right up to the top of the hour. So thank you, David Paul, Managing Director at VectorVest UK. Thank you for joining us again. I'm going to take back the control panel as we do.
Thank you, Simon. Thank you for having me. I tried to put as much in there as I could. And good afternoon, everyone. Hope you enjoy the rest of the day. Certainly, I enjoyed Charlie coming on now.
It's always a pleasure. Thank you very much indeed. Bye.